Our next guest says, get ready for a year-end rally no matter what happens at the polls. Let's bring in Savita Subramanian. She's the head of U.S. equity strategy at Bank of America Merrill Lynch. Nice to see you. Welcome.
Thanks. Yeah. No, I mean, I don't know if I would say no matter what happens at the polls. But I think that, under the two scenarios that are most likely, which is, a split government with Democrats taking the House or Republicans maintaining, I think both of those scenarios are actually pretty positive or, kind of neutral to positive.
Yeah.
For
I mean, history's on your side, right? If you think that, more times than not, there's been a ramp up after midterm elections.
Yeah, exactly. So it's, so it's just from
Is this time different on that, though? I mean, we just talked about all these forces at work.
Yeah, there's a lot of other factors at play here. We've got the Fed tightening. We've got central bank balance sheets starting to drift lower after moving higher for many years. Trade wars. So lots of items on the table. I think, though, what's really spooked the market is the Fed and trade risk. Those are the two factors that we've found explain a lot of the downside that we've seen over the last few weeks. So I don't know if the midterm election actually matters all that much in terms of staving off negative sentiment or
because as we were saying on the desk, the headwinds haven't gone away.
Exactly.
And they're likely not going to.
So the headwinds are firmly in place. I think the good news about trade risk is that it seems to be priced into the market pretty extensively. So if you look at the sectors that would be most hit by tariffs, either companies that import a lot from overseas or companies that export a lot, their multiple compression has been significant this year. Since February, when Trump started talking about this, you've seen these multiples compress. Meanwhile, earnings have still been very solid. So I think that a lot of this risk is in the market at this point.
So let me ask you on trade then. You think there's an asymmetric risk if there is a deal on trade, that would be a very big, it's not priced in at all?
I think that would be a really big positive because I think a lot of the overhang and where we've seen multiples compress the most are really around the trade-oriented or trade-affected sectors. So if we did see a resolution, I think that's a cause for a real knee-jerk rally.
Are you saying you don't agree with that? I mean,
no, I do.
Agree, right?
I do. I've been thinking trade has been getting praised. That's what a lot of the correction was about.
Yeah.
Right. So I think it's asymmetric.
I hear
if there's a deal, big
people
upside.
tossing around numbers like 10 to 15% increase in the S&P 500 over whatever period of time if you get a deal with China.
Yeah,
I
don't see that unachievable. I mean, multiples have compressed that much. I don't see why they wouldn't. If they mean reverted back to where they were in February, that would be 10, 15% right there.
All that said, do you think, as I asked the group here, that the correction's over or not?
I do. I mean, I would be a buyer into year end. I worry a little bit about next year. I mean, I think that a lot of the benefits that we've enjoyed over the last 9 years are going away. So, cheap capital is changing. Cash yields are actually starting to be competitive with other asset classes. So, I think we're towards the end, and I wouldn't necessarily sell into year end. I mean, largely because of the seasonal biases. But I do think next year is a year to sort of think hard about.
So I'm curious, everybody that I'm talking to kind of agrees with you that red wave, short-term bullish, long-term bearish. Usually when everybody agrees on one thing, it never happens.
It's wrong.
Right? So can you explain that, what's going on there?
Well, I guess just simplistically, and this is probably pretty obvious, but, if we maintain the Republicans at a sweep would try to jam as much growth into the pipelines over the next couple of years for re-election, and that could cause the pace of the Fed to be even faster than what's anticipated. And if that's the linchpin for this market, the Fed usually ends the party, and that's likely what would happen this time. We'd probably see more inflation, et cetera. So kind of the typical late stage rally, and then it's over. But if it is different this time, maybe a Fed that they could sustain that bull market a little bit longer if they sort of meter out the growth in a more rational way rather than just jam it all in over the next 2 years.
Can I ask you about the quantitative work you do on an earnings revision? So you put out this note that talks about how we're still above average in terms of earnings revision ratios, which is positive. How about the tech sector, which is higher than the average, but their earnings were always higher? Is that coming in more than the rest of the market, and does that concern you?
So tech earnings still look pretty good, but sales are starting to falter. And that's what worries me, is that if margins are at peaks, at peak levels, especially for tech, which is at kind of all-time peaks, And they're no longer benefiting from tax arbitrage and labor arbitrage and all these other great things. And then now they're starting to see a deceleration in sales. That's not a great scenario. So, I mean, I think out of all of the sectors, high growth tech is our least favorite place to be right now, just because, you know, it's seen a great run. It's got no regulatory issues, which might start to pop up here and there. And you know, the fundamental backdrop doesn't look as rosy as it did, you know, a year or two ago.
All right, Savita, it's good to see you as always. Thanks so much.
Yeah, great to see you.
All right,
Thanks.
Savita Subramanian, Bank of America Merrill Lynch. Let's trade it. Guy?
She's encouraging. I mean, I think there's a hint of
tech
bullishness
wild card,
there.
though, I just don't know.
I don't know either, and I'll say this. You know, I think people are, I don't know if convinced is the word. I think the market is just accepting the fact that a deal with the Chinese will get done. I'm not so sure. You had a great interview with Larry Kudlow. Larry didn't seem all that enthusiastic about a deal getting done. And I would push back and say, everybody thinks when President Trump is ready, the Chinese will come running to the table. I don't necessarily think that's the case. I think they have far more leverage than we give them credit for.
Could a change in the House affect the negotiation posture, too? I mean, it could soften a little bit, although that's really the administration. But I tend to agree, as we talked about who's going to perform or what to the end of the year. I mean, look at semis again. Another really poor day for semis relative to the market. Names like NVIDIA, high multiple names, continue to underperform. It's very difficult to see how that tide is going to turn in the next, at least in the end of the year. Yeah. So I would be staying
my biggest concern is if we do get this red wave, that people start to price in a faster Fed immediately. Everybody thinks you're going to get this bullish move, and I'm just concerned. I mean, we know from the last election that polls are just completely wrong. We can't trust those whatsoever. So you find out that all of a sudden we've got a red wave. I wouldn't be surprised to see the market sell off on increased Fed concern.
I'm still not convinced that the market can go up to the levels that Savita and others talk about without technology, because it's such a huge part of the S&P 500. The flip side of that is if you do get the market, you know, if there's a more positive bias towards stocks, you've got to believe that those stocks are going to go up if the overall market goes up, right?
I think a China deal gets those technology stocks back to those levels.
I'm saying forget about the deal happening between now and the end of the year. I mean, chances of that, I think, are slim.
I agree.
Right?
But even in a benign tape, I think your point is hard to see that leadership reassert itself in the way that we would like to see it. And I tend to agree.
I can't imagine the market going up without it.
Well, I think you're potentially getting some leadership from banks, again, have started to reassert themselves after significant underperformance. I think consumer discretionary, and I still hold out hope that this holiday season is going to be one of the best on record, and I think those are names that were sold off into this
Should be, given the numbers from the consumer
they're amazing.
that we've seen.